Let's go ahead and start by talking about, well, I think what everyone has been talking about the past couple weeks, and that is the election and the results of that. Now that Donald Trump is headed back to the White House, a lot of people are wondering how his new administration might affect their money. I think it's had people on the sidelines for a little bit, actually. I'm sure you've been asked that by your clients that are approaching or perhaps even in retirement. Is it a wait-and-see situation? What are you telling them right now?
Well, it's definitely been a hot topic, I think, all year long. Starting out the year, people wondering, what might the result of the market be in an election year. And if you go back, I think, and look at some of the advice that we had given, normally in an election year, the market actually performs pretty well, and that's exactly what we have seen happen so far this year. But in looking at the long-term results of election cycles don't necessarily favor one way or another. The market is just one more news to get past. I know it's been things that we've been talking a lot about. I think now that the election's over, one of the great things is all those commercials have stopped. But more so, I think in the portfolio, if you're looking at, okay, what do I do now under, Donald Trump heading back to the White House is lower taxes could be here for an extended period of time. I think that tax rates are still a significant risk for those folks that are close to or in retirement time. So before the end of the year, it's still a good idea to run a tax roadmap, look at possible Roth conversion strategies, look at how you're saving in the future, continue to focus on building those tax-free accounts. But as far as some of the, quote, Trump tax codes set to expire, that's a possibility that those lower taxes could be extended. The Tax Cut and Job Act, which was enacted in 2017 during Trump's first presidential term, ushered in lower tax rates. The legislation is due to expire at the end of 2025, but with this current election that we have, many of those tax changes could be extended, leading to more time to initiate tax-deferred strategies or tax-free Roth conversions to take advantage of lower rates. Usually when you're looking at detaxifying a retirement account, what happens is those type of things take time to do. There again, that's why I'm saying, regardless of the outcome of the election, before end of the year, run a tax roadmap to determine if a Roth conversion could be a good solution for part of your money before the year end. The second thing is I would expect markets to have some volatility. The markets reacted very favorable the day of and the week of Trump's win. However, it remains unclear whether the upward trajectory is going to continue. It goes back to the fact that the stock market is at or close to all-time record highs. I hope it continues to go up for quite some time, but the reality is unexpected things can happen. And if we have unexpected things happen, that could, create more volatility in the market. On the flip end of the scale, if you look at it, right now we have the Federal Reserve is lowering interest rates in a non-crisis environment. Historically, if you look at when the Federal Reserve is lowering interest rates in a non-crisis environment, that has tended to perform well in the markets over the next year. There again, going back to as long as something unexpected doesn't happen, right? So COVID, 9/11, those type of things can change markets in a hurry. So addressing where your situation is very important. We get together with somebody that we had run the Retirement Team Action Plan earlier this week. And when we ran the Retirement Team Action Plan, what I would say is the wife had felt that, she was much more conservative. It was important for her to have peace of mind and protection. The husband maybe a little bit more aggressive in her investment than her investment portfolio. And when we ran the analysis, what it showed that their portfolio actually had a risk score of 77 out of 100. So it's almost in the terms of driving a car 77 miles an hour is kind of an aggressive portfolio. Mm-hmm. The good news is the market's been great, the last 2 years, so I'm sure they've seen some good growth in the portfolio. But if she is more of a conservative investor and she wants more peace of mind, and stress testing the portfolio, it showed that in a maximum drawdown, her portfolio could go down about 44%. By knowing that information now and understanding that volatility could come after the election gave her the ability to make a better informed decisions while the market's high. The third area I think that could come back up to bite us again is inflation could go back up. So I know Trump is talking about tariffs on some imported goods and services, but whenever costs go up for goods and services, I would say us as Americans end up paying that, and we can end up paying that in the form of inflation if it takes more money out of our pockets to buy those things based upon what the pro-business policies are. And those are the reasons why, again, put the election beside. If you were waiting to make an investment decision until after the election is here, or if you weren't sure, what was going to happen and you need a game plan, that's what we can do in that retirement team action plan. We can help you sit down and figure out your 2025 game plan and decide if there's any changes you need to make before the end of the year. Just give us a call, ask for that retirement team action plan, and we'll put that together for you.
That retirement team action plan is comprehensive, of course, standing for taxes, estate planning, asset protection, money management, not just for the outcome of this election, but the elections to come. I know we're going to sound like a broken record in that regard, but you want something that is not dependent on, what the next 4 years are going to look like, what the next 2 years are going to look like, but throughout the course of your retirement, however long that is going to be. And so having this plan in place is a great way to start. All you need to do to get started is give a call, reach out to the team, 419-794-3030. Begin that retirement team action plan process, 419-794-3030, or you can find them on the web at arhq.com.